How will the economic landscape of 2025 shape your investments?
Great question. Join formidable minds like Danielle DiMartino Booth, Ken McElroy, and Jeff Snider.
We've harnessed the power of artificial intelligence to distill their insights into digestible summaries, saving you precious time.
Buckle up for expert insights, starting with Danielle DiMartino Booth, who reveals the critical economic issues we'll face.
And stick around. After that, you'll hear from Ken McElroy on California's transforming real estate market.
Just a quick reminder, this content is for educational purposes and not investment advice.
Today, we'll be exploring insights from Danielle DiMartino Booth about the pressing economic challenges that will shape 2025.
Danielle highlights the spiraling United States debt and the potential disconnect between Federal Reserve policies and real-world impacts.
Danielle DiMartino Booth argues that extending the tax cuts could add significantly to the national deficit, worsening an already critical debt situation.
She warns that without fiscal discipline, the trend of rising debt could lead to long-term economic instability.
Danielle expresses serious concerns over the Federal Reserve's disconnect from the struggles faced by Americans regarding job losses and bankruptcies.
She points out the surge in bankruptcies and the challenges posed by high interest rates for many companies.
DiMartino Booth emphasizes the ongoing hiring freezes across industries, illustrating the challenges that employers face in expanding their workforce.
Additionally, she links advancements in artificial intelligence to a reduction in job opportunities for skilled workers.
Danielle DiMartino Booth underscores the importance of monitoring the banking system in light of potential double defaults, which may signal deeper systemic issues.
She stresses that regulatory actions will be crucial to managing these potential challenges.
In conclusion, DiMartino Booth advises that both investors and policymakers must prioritize fiscal discipline and brace for volatility in the banking sector.
Identifying these challenges early will be crucial for navigating the economic landscape of 2025.
Today, we are exploring the insights of Ken McElroy regarding the changes in California's real estate market following recent devastating wildfires.
Ken indicates that the destruction caused by these fires will lead to considerable market shifts, including increased listings and relocation of affected residents.
Ken discusses how natural disasters, like the recent wildfires, have historically led to significant shifts in populations and real estate markets.
He points out that many individuals who have lost their homes may choose not to return, mirroring trends seen after other major disasters.
Ken emphasizes the crucial role of insurance policies, indicating that homeowners often navigate complex negotiations with insurance adjusters.
He shares experiences from previous disasters where lengthy disputes with insurers were common.
According to Ken, California's real estate market is poised for a significant increase in listings as residents search for alternatives.
While immediate demand might drive prices up, long-term trends remain uncertain due to various influencing factors.
Ken predicts a substantial outmigration of residents seeking more favorable living environments.
He warns that bureaucratic hurdles will strain housing availability, complicating market conditions.
Ken advises homeowners to thoroughly review their insurance policies to ensure adequate coverage.
He encourages potential buyers to carefully evaluate market conditions, as they will fluctuate in response to ongoing recovery efforts.
Today, we're reviewing Jeff Snider's analysis on how soaring oil prices and recent sanctions may adversely affect the economy.
Jeff emphasizes that rising oil prices aren't necessarily inflationary, but reflect deeper economic issues related to consumer impoverishment.
Jeff argues that when oil prices rise, what we see is a deterioration of economic conditions, making consumers feel poorer.
Instead of sparking inflation, these price hikes often exacerbate the existing economic strains.
Jeff highlights how the recent sanctions imposed on Russia are causing considerable uncertainty in the oil market, pushing prices up.
The rapid price increases suggest a market panic regarding potential supply shortages, indicating instability.
Jeff clarifies that current economic challenges are often misrepresented as inflation, while the real issue is consumer impoverishment.
He stresses that true inflation is driven by monetary policy, not just rising commodity prices.
Jeff warns that the combination of high oil prices and a fragile labor market drives consumer pessimism.
As consumers face higher prices for essentials, there's less disposable income for non-essential spending.
Looking ahead, Jeff predicts that volatility in oil prices may continue, resulting in ongoing economic adjustments.
Such fluctuations could further delay recovery for consumers, complicating economic stability.
Jeff emphasizes the need for consumers to adapt their spending strategies in response to this economic reality.
Moreover, he calls on policymakers to focus on addressing the core issues and not just react to price hikes.
Today, we're exploring the future of Bitcoin, featuring insights from Samson Mow and Clem.
Samson argues that Bitcoin is undervalued amidst macroeconomic struggles, while Clem raises concerns about its immediate prospects.
Samson suggests that Bitcoin is significantly undervalued, even at $100,000.
Clem counters that Bitcoin's current price reflects a balance of supply and demand, and significant growth may be limited.
Samson highlights that Bitcoin may experience exponential growth in the coming months.
Clem believes that the market may see significant pullbacks and advises caution.
Samson argues that Bitcoin's finite supply positions it as a superior asset.
Clem warns that traditional financial systems maintain characteristics that Bitcoin could have difficulty surpassing.
Samson believes 2025 could be a transformative year for Bitcoin, with unprecedented price levels.
Clem suggests that Bitcoin's growth may stall or reverse, emphasizing the importance of cautious investment.
Both experts agree on the importance of careful investment strategies when considering Bitcoin.
They encourage investors to stay informed and make rational decisions based on market trends.
Today, we're reviewing the insights shared by the host of The Technical Traders regarding the recent bullish moves in the equity markets.
The host notes a significant pre-market pop in indices like the S&P 500 and NASDAQ driven by underlying strength.
The host explains how recent cycle lows will unfold, potentially leading to a market rebound.
He suggests that observing these cyclic fluctuations gives crucial insights into future market behavior.
What does the host suggest about the potential for a rally in the S&P 500?
According to the host, there is bullish momentum that could lead indices to rally by 5 to 11%.
How significant is economic data in influencing current market trends?
The host points out that although the data can be noisy, price movements often reflect the most pressing news.
What strategy does the host recommend during times of uncertainty?
The host advises closely monitoring market trends and being flexible with investment strategies.
What does the host foresee for the upcoming market landscape?
He predicts volatility and a dynamic market environment that could present unique opportunities for investors.
In conclusion, what key takeaway does the host provide for investors moving forward?
The host emphasizes the importance of staying informed and agile in a potentially chaotic market environment.
Today, we're exploring the return of bond vigilantes with insights from Jim Bianco.
Jim highlights how rising yields reflect market skepticism toward the Fed's inflation policies.
Jim Bianco asserts that rising yields are a response to the Fed's handling of inflation.
He emphasizes that the bond market is sending a clear message: higher inflation is a threat.
According to Jim, the U.S. economy is performing well, while China and Europe are struggling.
He notes that Germany faces particular vulnerabilities due to rising energy costs.
Jim highlights that stock valuations appear excessively high and raise concerns about future performance.
He believes that low stock returns should be anticipated as the market adjusts.
What does Jim predict for the near future of markets?
He anticipates modest returns as investors adjust their expectations amidst rising yields.
Jim recommends that investors embrace a balanced portfolio strategy as we approach 2025.
He stresses the importance of being selective in stock picking and not solely relying on passive indices.
Wow, what an array of insights from our expert guests today.
Indeed, each guest brought a perspective that really challenges us to think critically about our financial future.
Right. I found it especially interesting how Jim Bianco and the Technical Traders host both highlighted the need for adaptable investment strategies.
But they don't entirely agree on the potential outcomes. Jim's concerns about rising interest rates reflect a cautious stance, while the Technical Traders seem a bit more optimistic about short-term gains.
And what about Bitcoin? Samson Mow is super bullish, predicting it could soar to $1 million.
While Clem counters that with skepticism, raising valid concerns about Bitcoin's limitations. It's a real clash of viewpoints.
It just shows how layered investment strategy can be. And speaking of layers, Jeff Snider's exploration of rising oil prices and economic nuances was quite eye-opening.
Absolutely. He makes a compelling case, differentiating between inflation and consumer impoverishment, which is something we often overlook.
And Ken McElroy's insights on real estate trends post-wildfires in California really brought an urgent dimension to our conversation.
Yes, the potential surge in property listings could drastically reshape the housing market. It's a lot to digest.
If you've enjoyed these insights as much as we have, give us a thumbs up and don't forget to subscribe.
Your support enables us to continue bringing you the most valuable economic insights straight from the experts.
Stay tuned for our next discussion, where we will delve into the intricacies of global trade and its effects on the economy.
You won't want to miss it. Thanks for watching, and we'll see you in the next video.